everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. Now, today we're taking a look at the 30-year bonds. Really good market, especially on a day where there's a lot of news going on today. Mrs. Yellen hit the microphone and she got the market moving quite a bit here. Now, starting off the day, first of all, always a good idea to see, what happened yesterday. Does this make sense, what we're seeing? Yesterday was a range. We didn't really have a whole lot going on yesterday. They came off the lows, went to the highs, and overall, yesterday was really slow. Looking at the bottom to the top, you're looking at an 18 tick range, right? I mean, it's abysmally slow. So given the overall movement being so slow, there's going to be a lot of kind of tension, right? It's like crunching a spring together and then letting it go, right? And today, it was let go on, well, Yellen speaking, right? So that caused a lot of this movement that we're seeing, but the overall move still started off as a range today as well. We had a small gap down, very minute, nothing really going on, kind of back and forth, and then this hit. Right now, when we started pushing into 10 o'clock, big breakout to the downside, complete shift into what has happened so far, right? We're seeing a range over the past couple days now. We're not really getting much movement. And then all of a sudden, boom, right? This big dump lower shows that the sellers are likely trying to take this move now. The spring is coiled up, the tension has been released, now they want to pounce all over it. Now, this is a very big trade in terms of risk, so some traders will opt to stay away from it, but it is a breakout move to the downside to get a doubling of itself lower. Now, after that big breakout move, they further confirmed it with another consecutive breakout to the downside. Now, I'm not a big fan of taking the extra moves lower, just with, we have extra confirmation, sell here, right? You can, as long as the stop is wide enough. But I would rather wait for something a little more, right? Give me a bounce. Show me something that the sellers are taking some profit and then sell it again, right? So we get a small little bounce here, lots of wick on the bottom, inside bull bar, tries popping its head higher and slammed right back down again. They couldn't even trigger above the bull candle. Very big clue there. So with that massive clue, that's a sell opportunity to drive the market back down. Now the bears, not so good follow through anymore, right? We got a bull candle right after, but notice what happened. As soon as it poked its head above, it got slapped right back down again, and that's another reason to sell to drive the market back lower. Now, we finally found a bottom down here at just under that 150 mark. We saw a massive buying pressure at 150, that massive buyer yesterday at 151, as well as 150. Looks like they're kind of scaling in at the moment. And now that we got a little bounce off of that, sellers are waiting now. They don't want to sell low anymore because we're getting a correction. This isn't breakout mode anymore. Now it's bouncing mode. So you let it bounce, show the sellers want to come back in, and then try to drive the market back down. So overall, really kind of a funky day today with all of the news, with Yellen throwing the markets all over the place. It was a little bit of a chop and slop fest today, but if you played it safe, you kept your risk minimal, it wasn't too bad at all. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, maybe a little entertaining, and we'll see you next time.